Hello, welcome back to Core Finance. I'm Matt Brown. I'm joined down the line by Ryan Littlestone, who is an analyst and trader at ForexFlow.Live. Good morning to you, Ryan.
Good morning, Matt. How are you?
Yeah, very well, thank you. Busy start to the week. I mean, let's have a look at a couple of currency pairs. Starting off with cable. Obviously, a lot of news over the weekend. Tax reforms getting through the Senate finally. And sterling, obviously, is going to be in play this week with continuing Brexit negotiations and a lunch today. From a technical point of view, what are we looking at? Where can the pound go from here?
Well, like you say, the big news is obviously Brexit and the talks ongoing with the Irish border. That's pretty much the third nail that needs to be battered down, and potentially we can then move on to the second phase of the talks. So all the politicians, all the Brexit negotiators have been busy over the weekend trying to hustle down a deal. From what we can make out, it's 90% done, and they're just finalising the final text, if you like, the wording, just to present to each government to pass, and then it goes on to Juncker and the likes. But the meeting today between May and Juncker has been built up as a defining moment, because Juncker said a couple of weeks ago that this meeting is where he'll decide whether talks move on to the second phase, and he likes to think he's in charge of everyone, let alone what the 27 other states have got to say for themselves. So here we are. The pound was higher initially this morning or overnight, when these headlines came that we're 90% done. We fell a bit again this morning as more headlines came out saying not so fast, we're not quite there yet. But we've had a good run up. When we first got these breaking headlines, we're down at 132.20, and we've got these headlines saying that deals were likely done on all three counts, and we've shot up here, to 135, 135.50 odd, and now we're in that sort of treading water phase. So today it's really going to be about going with the headlines. I see three real scenarios for the direction of the pound. After the May Juncker meeting, if Juncker comes out and it's a big flat no, we're not moving on to the second phase of talks, then the pound's going to get hit hard, and we're probably going to find ourselves down into 133, even worse, perhaps. If it's a no, but we're going to allow the talks to continue on the border, I think we might see an algo-led drop on the no headline, if it's anything like that. But then we could find some support coming in, because that extra time between now and the 14th, 15th of the deck, where the summit is going to allow traders to get back into that trend and keep the pound buoyant. Anything that suggests we're going to move on to the second phase and Juncker's happy, then again the pound is going to fly, and we could see those highs at 136 tested.
Understood. And it feels though those highs of 136 and just above is a key level that potentially there could be some resistance that could turn into support.
Yeah.
If we do get above that, what's your outlook for the next few weeks on the pound?
Well, if we get above that, there's on the charts, you look at, things like the daily charts or the 4-hourly charts, there's some pretty empty space to retrace some of that Brexit fall. When we had the first big dip after the vote, where we started seeing resistance coming in was up around this 135, 136 area. But above here, we could go up to 138 odd before we get the next sort of big test, and perhaps even higher. Because that's going to kick us off. That's one hurdle over, and then we're into the trade talks, and that's the big deal. If we start getting agreements that we're going to enshrine EU law into UK law, protect the financial services, banks won't have to leave, that sort of stuff. It's big news, and that's going to potentially can rewrite the whole of the Brexit drop that we've sat in for the last year or so, 2 years.
Okay, and two things for you. First off, who do you think is going to pick up the bill at lunch? And secondly, the dollar itself has been. We've seen obviously a bit of strength on the back of US tax reforms. How much do you think the dollar at the moment is driving dollar pairs?
It's been quite a big driver recently, but mainly. For my mind, it's been a lot of yen moves, because dollar yen is always the proxy for what happens in the US, and that's not been moving that much. Very, very tight range between sort of 111, 113. So it's been yen that's been a big driver, but in the core pairs like cable and euro dollar, yeah, we've seen some of that positivity. The tax news is a funny one. We had a big sell-off on Friday on the Flynn news, and even the tax news just got ignored. And I think that's the case today. Although it passed the first hurdle over the weekend, the market's pretty much back where we were in dollar yen, and it's really been the Flynn news that's switched it all about. So you take out Friday's move, and we're back where we were beginning of Friday. And in that case, when you look at it and bring the tax news into it, the fact we're not higher now, this tax deal has passed, you've got to ask the question, how much really are traders trading on this tax news?
And looking at another dollar cross, the dollar CAD on the hourly chart, obviously been quite an active pair, and we've enjoyed chatting about this over recent weeks. Where do we go from here after this big sell-off?
Yeah, well, again, it's another data-led sell-off that we've seen, and at the moment, the Canadian dollar's trading like an emerging market currency. Anytime we get any decent data, you're looking at between 100 and 200 pips. It's fantastic for volatility and for trading it. When you get data out in the Eurozone and the thing doesn't move 10 pips. But this has been great. I mean, I got into a trade on Friday. I started buying it from 27.89, I think was my first entry. And I brought it all the way down to 127 because we've got the Bank of Canada on Wednesday. The GDP data was good. The jobs data was extraordinary, you could say. Very good data. And here we see the CAD gain because the market thinks that that's going to tip the Bank of Canada's hand, perhaps to more hawkish or to another hike. I still think that Pollard is still trying to justify the last couple of hikes. So this data is more or less a justification of those hikes. I don't think it's going to change the Bank of Canada's hand. I don't think they're going to hike on Wednesday. And again, what we've seen is that if there's some expectation built in, and that doesn't happen, or we don't get the expected result, market doesn't see a more hawkish Bank of Canada, then dollar CAD is going to jump again, and we, come Wednesday afternoon, we could be up at 128 again. Looking at the chart, we've got a very strong level down here at 126, sort of 60, 70, which has been a strong bottom recently. So that's where I'm leaning against. I've got to stop just under that, and I'm happy to stay in longs into Wednesday, and hopefully we'll get a nice pop when the announcement comes out unchanged, and hopefully I'll get some money back.
Good stuff. Yeah, I mean, it's certainly an active pair, so one to watch out for later in the week. But until then, Ryan Littlestone, trader and analyst at ForexFlow.Live. Thanks very much for joining us down the line today.
Thank you.